Hey guys, welcome. We'll get started shortly here. Hey guys, welcome. Welcome guys, welcome. Welcome guys, welcome. We'll get started shortly. Hello. Welcome guys. We'll get started shortly. Welcome Andrew, welcome Garvin. Welcome guys. Welcome guys, we'll get started shortly here. Welcome guys, welcome. Hey Danny, welcome. Guys, we'll get started shortly. Hope you guys are having a great week. We'll get started shortly. Hey Gerald, welcome. We'll get started shortly, guys. Hey Juan, welcome Juan. We'll get started shortly. Welcome guys, welcome. Hope you guys are having a great week. We'll get started shortly here. All right, guys, let's get started. All right, guys, welcome everyone. As you guys know that this is the class we do on Tuesdays for beginning traders. So whether you've got no experience at all, just a few months into trading or even a few weeks, okay? This is your safe place to learn about trading. We don't have any, shouldn't have anyone on the call with years of experience, so don't feel like you've got to be perfect with your trading knowledge here, okay? So we're getting started and we're trying to figure things out with your trading, all right? So this is your, I call this your safe space to ask questions and get the information you need to get your trading on the right track. All right. So what I'm going to do this evening, I'm going to do things a bit differently. I'm going to open up the floor and find out what you guys need. So as new traders getting into trading, what things do you think you need? Okay, what obstacles that you guys might come across or think you might come across as you evolve and get into trading. Okay, so I'm kind of just want to have a conversation. All right, if there are anything that you guys are looking at, any stocks or anything, we can take a look at that also. But anything, whether it's technical analysis, mindset, just anything at all that as new traders, you guys think that you might need help with. All right, so I'm going to just open it up and just ask me any questions at all. All right, so anyone?
Yep. Shall I?
Oh, hey, RK. Hey, how you doing?
Hi, I'm good. Thanks. How about you?
Good, good. You have a question for me?
Yeah, my question is primarily it's the entry. Like what is the right time when to take the entry? That's one thing. Second is that the reversal stuff, where I'm always getting confused that when the candles are going to reverse, when the trend is going to reverse, what is the right entry, when to take the right entry. So these are some of the questions that I have.
Okay, so we need the right entry. So the right entry, meaning when to get in, so when to enter trades.
Yep.
And then the second one was when to anticipate what reversals?
Yeah, reversals, when to anticipate reversals. What I'm doing right now is I'm looking at the Ethereum chart just to get the idea that how exactly it's gonna work.
Which chart is it? Okay.
Ethereum, ETH USD on Trading View.
Yeah, I'm
It's a
having
crypto. It's Ethereum. Yeah.
So that's Ethereum.
Ethereum?
Yeah, that's right.
Okay.
So I'm looking at Ethereum just to get the idea that how exactly I can read it.
Okay.
So
okay.
That's where I'm finding it.
Okay. What time frame are you trading it on?
To be very frank, I'm not trading right now because I'm still learning. So I am looking at a 1 hour time frame right now.
Okay.
And I keep on shuffle between 4 hours, 1 hour and 15 minutes. That's normally what I do.
Okay. So 15, 1 hour, 240. Okay. So we'll break that down for you. Okay, so basically, we'll look at the entry, and this is a good topic. Entry, exit, reversal. All right. So we'll start with this. A very good question. Let's see here. All right, so Ethereum. I'm going to share my screen here, guys. Okay, so here is Ethereum. Let's find it here. Okay, it's right here. All right, this is a 240 time frame. Okay.
When you say 240, what do you mean by that?
What's that?
I did not understand when you said 240.
Yeah, 1 second. Yeah, I'm having a tough time hearing you clearly. Okay, try again.
Yeah, when you say 240, I'm just trying to understand what is this time frame? Is it like 4 hours?
Yes. So
Okay.
so this is a 240 view. If you look here, 240 minute. So every candle is 4 hours or 240 minutes worth of data.
Got it.
Yeah, from open to close.
Got it.
Okay, so let's do this here. All right, so you're looking at the 240, the 1 hour, and the 15 minute. Okay.
Yeah.
Okay, so let's break it down here. Hey, RK, do you have the 4 market phases? Have you been here before? And do you have the 4 market phases from us?
No,
No?
I don't
Okay.
think so.
Okay, I'll share that. All right. All right. Okay, guys, go ahead and if you guys Arcade, take a picture of this. I'm going to I'll share it here. And those of you who do not have this, because his question is an important question, especially for new traders. So we'll get into this. Okay, so go ahead and take a picture of this. Go ahead and take a picture of this, guys. You should see on my screen, it says the 4 market phases that every trader must know. Okay, so the 4 market phases that every trader must know. Take a picture of that. I always recommend that traders print it out and laminate it so that you have it, all the time.
Yep, done.
Okay, so you guys got it? You have it? Everyone got it?
Yeah.
Okay. So I'm going to go, let's go over it for a second. So, RK, to your question, when do you get in, right? When do you get out? And then the reversals. So we always start, when we trade, we always start with accumulation, right? It's usually at the bottom of your chart, either left of the bottom, sometimes at the right of your bottom. So accumulation is number 1. These are the 4 phases. Accumulation, all right? For support and resistance, all right? Support, right, is where price holds at the bottom, resistance is at the top. And what we want when we buy, right, when do we enter? We want to enter always on a break of resistance. That means the buyers are in, right? The buyers are coming in, price breaks resistance. We want to buy here. All right, so we want to buy on a break of resistance. Your reversals, RK, your reversals and everyone else, right? When we look for price reversals, it's always going to be at the top of your chart where price is no longer making higher highs, right? So kind of price flattens out, all right? But before we get there, we have the markup phase. So accumulation at the bottom, price breaks resistance. We get a buy signal on the break of resistance. This is the markup phase. So that's your trend, right? So that's your upward trend, long trend. That's the markup phase, phase 2. At some point, because price will never move forever, right? It's got to slow down. So this is where it slows down at the top, where it no longer makes higher highs. Okay, that's number 3. That's the distribution phase. That's your reversal. Okay, okay. So your entry is here at accumulation, break of resistance, this line right here, this is where we buy. Once the price can't go any higher, right? That's the distribution when price breaks support. So we always want to buy at resistance, sell at support. When the price breaks support, right? That would be our exit. So or we would buy on a break of resistance right here, sell, exit on a break of support. All right. It doesn't matter if we break support in here, we would get a sell signal. That would be our exit here or here. All right. This is your reversal. This is important. When the price breaks support, right? All right, and gets into that distribution phase, that's your reversal. That's your reversal. And that's the markdown phase, right? That's the markdown phase. So accumulation, markup, distribution, markdown phase, okay? Within the markup phase, we also have reaccumulation, right? Where that's new money coming in on a break of resistance. So we can add it to our position. Same thing here in the markdown phase, redistribution, we can add to our short position to go lower, okay? So this is an important chart here for you guys to follow, okay? As to where do we get in, where do we get out, or exit, and then, right, the reversals. Either the reversals to go down or the reversals to go up, all right? Does that, RK, does that help?
Yes, sir, it helps. But by looking at this diagram, I'm able to understand that. But when we go to the real chart, that's where the confusion happens.
Okay, perfect. Okay, so let's go to the trading screen, all right? So we're going to take that information, right? That information we just went through, and we're going to apply it to the chart now, okay? So when we trade, I know as new traders, we come in and we think that, hey, we need to do a lot of work, all right? Trading is easy, and we want to keep it simple, all right? The simplest thing that you guys can do is to focus on one chart, all right? I'm going to recommend, as new traders, you pick one time frame. You pick one time frame, all right? So if we're looking at several different time frames, like the time frames you gave me, all right? We've got a 15 minutes, 60 minutes, a 4-hour chart. That's too much information, all right? That's a lot of information. Remember this, every time frame is going to give you a different buy entry and a different exit, all right? So on the 15-minute, it's going to give you a different buy. It's going to be in a different. So if you take the 4 market phases, right? So you will have the 4 market phases on the 15 minutes. You'll have it, right, on the 60 minutes time frame. You'll have it on the 4-hour chart, 240-minute time frame. So you'll have different buy entries, different sell entries, and it's very, very confusing. All right, it's very clear. It's very confusing. So what I recommend, at some point in your trading career, you'll get to the point where, you know, you might glance at, you might glance at a time frame and then go back to your main. We call it your trading window. So as new traders, guys, we have to pick a particular time frame, a trading window that we always trade on, okay? Where you will have your entries and your exits, and you will follow the 4 market phases, okay? It's very, very critical that you pick one time frame, all right? All right. Also, when you guys select a time frame, it's not because of what you want, okay, to do, all right? it has a lot to do with, well, I'll put it this way. When you select a time frame, understand the reason why there are different time frames is because of price movement. Okay, so I'm going to move this here. Stop me if you guys have any questions, okay? Please stop me if you guys have any questions, because this is important.
The two lines that you have, the moving averages, is what is the configuration of that?
Yeah, I'll get to that. Just remind me.
Sure.
All right. So we've got the 15 minutes, the 60 minutes, and the 240. Okay. You pick a window, you pick a time frame to trade on, and you stay with that time frame. We don't go back and forth, right? We don't go back and forth. Now we can when you guys get good, you can look at a smaller time frame just to see what price is doing, but boy, stay on one time frame. All right. When we pick a time frame to trade on, I'm going to bring in one more. Right? And we do this in our one-on-one coaching. You base your time frame on the way you want to trade. And I tell traders, base your time frame that you select on your schedule. On your schedule. Okay, so if you're working, you've got a full-time job, guess what? It's going to be really, really hard to trade on a 15-minute time frame or even a 60-minute time frame. All right, understand that with these time frames, the price closes. So on a 15-minute time frame, all right, that time frame, that price will close from open to close every 15 minutes. Okay, so every 15 minutes, if you guys look here, every 15 minutes, this candle right here, opened and closed, right? Will open and close every 15 minutes. So we'll have a lot of new traders come in, and they want to trade on a 5-minute time frame or 1-minute time frame. And what they don't realize is this: if you're trading on a 5-minute time frame or 1-minute time frame, you better be in front of that screen. You better be watching it, because this price moves very, very fast. And from 1 minute to the next, look here, from 1 minute to the next, you could get a sell signal. From 1 minute, this candle here, right, that's 15 minutes. Okay, so from this 15 minutes here, 15 minutes here, if you're working and you can't watch it, guess what? You should not be trading on the 15-minute time frame. Right? You should not be trading on it. You should not be watching it. All right. Same thing on the 60-minute. Every candle here is 1 hour worth of data. All right. So guess what? Right? You can get a buy signal in that hour. 3 hours later, a sell signal to get out. All right. So when we trade on these smaller time frames, we want to be careful. Okay. So that's scalping, that's day trading, okay, that's active trading. I tell new traders, trade on minimum the 1 hour chart, preferably the 4 hour time frame, okay, the 240. Okay, because most of you, when you come into trading, you will not be trading full time. Okay. Most of us have jobs. You guys have jobs. You're working. You've got other things. You've got families, right? So sitting in front of the computer for a long time, guess what? You don't have that time. And another thing too, with the smaller time frames, is that in order to trade the smaller time frames like this, you've got to be in that market during the time that there's volatility. So for Forex, for example, right? If you want to scalp that market, you're going to have to be up 3 or 4 a.m. in the morning watching these markets. Okay, so I tell traders, new traders especially, stick with the longer time frame, stick with the 240, right? Forget about the smaller time frame. And then what you want to do is you want to find the 4 market phases within that window that you're trading. Okay, I would say at a minimum, you can do the 60-minute, right? At a minimum, you can do the 60-minute. I mean, we have traders that will do the 15-minute time frame, but they're more advanced. I mean, they've been trading for a while. They know what they're doing. All right. Any questions on this? On the time frames, that's important.
Yep, got it.
All right. Okay, so let's talk about the 4 market phases. So this here would be a accumulation. Accumulation will happen, guys, after the price has fallen. So after the price has fallen, come down, right? We're going to get accumulation, right? Right at the bottom here is our accumulation. And then what we're waiting for, so you wanted to know, okay, your entry, right? Your entry. So this is a good example here with Ethereum, right? But remember, this is on the 1 hour time frame. So if you are going to trade it on the 1 hour time frame, this is perfect, setting up perfectly right now. On the 4 hour time frame, it's got a long way to go. It's got a long way to go. All right. So I'm going to ask you guys, which phase is this in right now from your chart? From your chart, the 4 market phases, what phase is this in right now, right here? Anyone?
Is it still accumulation?
It's accumulation. Very good. So it's accumulation. So let's draw it out. So here's resistance right here. Here is support right here. All right. So this is accumulation right in here. What we're waiting for is a break of this resistance. And buyers, we want buyers to come in. So we want price to break resistance, buyers to come in to now get into the markup phase. All right.
I have a question here.
Okay.
When you have drawn the support and resistance, you have drawn it at a different level. So why don't we need to draw it at the high level, at the same accumulation level, at the lowest level at the accumulation level?
Okay. So this level down here?
No. Near about 2000 and let's say near between 2300 and 2400. Like 2,375 approximately.
Okay, tell me where to start.
No,
right here?
just a bit up. Yeah, exactly. This one. No, a bit down. Bit more down. Yeah, this one. Yeah, and resistance on the upside, which is at 2,500.
Okay. All right.
So that's what my question is, that why we don't need to draw it at those levels?
Okay, so you're saying support, you're looking at support right here rather than here.
Exactly, yeah.
Okay, so let's take a look at this then. Okay, so support, right? We get support when we have several price reaching a particular level. Okay, so we want price. Think of support as your floor. Okay, so we want to see price come to that particular area and stop. All right. Here we don't have that. We don't have a consolidation, or I like to say a cluster of price coming to a particular area. We have one, see right here, that's one price line right here. That's about it. But if we move up, if we move up a little higher, like right in here, okay, you'll notice here that price, this is why we have these lines here. This is a support line. So we have price touching this area here. Look at here, look at here. Price. You see this, right? You see this price coming right to the lines here, right to the lines here. See the price coming right. You see the candles here? Let me open it up. Hold on. Hold on, hold on, hold on, hold on. Okay, you guys see this? You guys see this where price, no, it's not an exact, but you can see where price is kind of getting to this level here and stop. Get into this point here and stop. Get into this point here and stop. And we have, when we look at this whole area here, this is the area here where we have more price coming to this area here and stopping. That's our support. You see that?
Yep.
Okay, okay. So we have, and the system will draw this out for us automatically. Okay, so we have, that's why we have this support line here, that support line here. Here is not really support. Okay, that's not really support there, but good question. And then resistance is right here. This is where we had price touch before, right in here, right in here. All right. So this is, you're right, this is the accumulation phase. Okay, this is the accumulation phase. So our buy signal, okay, our buy signal would come from what? Where would our buy signal come in at based on the 60-minute?
So if it breaks the resistance level?
Yes, so we want the price to break above this resistance level, and that would tell us that the buyers are now in control. All right, the sellers are no longer in control, and now the buyers are in control. All right, so we would wait.
So,
and wait.
Again, I have a question. Again, I have a question up here.
Okay.
So the resistance level that you have drawn just now. So if the price breaks that level, and after that we have another level, which is 2,500, or just recent past, right? So do we need to wait for price to break both the levels, or just one level which you have drawn?
Yeah, so we would need price to just break resistance, and ideally, so we want price to get, I would say, above, let's see here, really above 2484, ideally. Okay, we would like for it to close. So we would like the price to break and then close. Okay, you might get more confirmation if it gets above 25. So 2,500, that would be further confirmation. Okay. In this case, with the system here, all right, we would get green candles. So right now, guys, you see these white candles right here? These are consolidating candles. These are white consolidating candles. All right. Once we get a green candle, right, and hopefully we want a big green candle in this case, which would tell us that something like this here, that the big institutions are in and that they're buying. All right. So that would be your confirmation, right, to start buying. We need a break of resistance. If the price continues to consolidate within here, this range between support and resistance, we do nothing. We do nothing. All right. If the price breaks support, that means the sellers are now back in control. All right. Which could happen. What phase? So that's the 60-minute, and this is why, guys, it's important to trade on one window, because this here is very different from this. So what phase on the 240? What phase is Ethereum on? What phase is this? Okay, Peter, go ahead. Go ahead, Peter.
We're in a markdown phase.
Markdown phase.
Sellers are in control.
Yeah, so the sellers are in control, right? The sellers are in control, and we're in the markdown phase. So this is why it's important, guys, to stay on one time frame, right? Because guess what? This is very different from this. This time frame here is very different. This is accumulation. This is accumulation. This is markdown. All right, let me repeat. This is accumulation. This is markdown. If you go to a daily time frame, you might see something different. If you go to a 15-minute time frame, it's going to be in a different part of the phase of the 4 market phases. Okay, so this here, this is setting up for a buy. Right here, it's not. All right, so if we try to get a buy of this here, it's not gonna happen, because we're in the markdown phase where the sellers are in control. On this time frame, the buyers are getting ready to be in control. Very different. You would trade this, very different than you would trade this. All right, that makes sense?
Yep, it does. It does. I have one more question. In the 60 minutes time frame, you have shown that when the green candle appears and it breaks the resistance line, closes there, that's a signal that we are good to go with buy, right?
Correct.
And my question is that if you see at 1 p.m., right, there's a green candle which appears, it breaks the resistance line and close above. So was that also a buying signal?
I'm having a very difficult time hearing you. Okay, I'm sorry, repeat that?
Yeah, sure. So my question is that if you see at 1 p.m.
You said 1 p.m.?
Yeah,
right,
1 p.m.
Right here, okay.
Yeah, exactly. There are 2 green candles.
Yes.
And this candle breaks the resistance line and closes above.
Okay.
So is this also a buy signal?
Okay, okay, good question, good question. Okay. All right, let's see here. Good question. All right, let's do this. All right, we'll turn on the automation here. Okay, good question. Okay. All right, so your question is right here. Good question. All right, okay. So I've turned on the automation here. All right, so here was our short trade here on a break of support. So right up here was the short trade on a break of support. This on the 60-minute time frame. Let's do this for now. All right, so here was the, remember, we always want to buy at resistance, like here, buy at resistance, sell at support. Sell at support or go short. Go short is we're taking it down. All right. So here was the short trade on the break of support right here. Right. This red with this red arrow here is our trigger to go short. This triangle is right here at this point on the candle where we went short. All right. We got out on a break of resistance. So when we go short, we enter on a break of support right here. We exit on a break of resistance. It's vice versa when we go long. When we go long, we buy on a break of resistance, sell at a break of support. Let me repeat that. I know it's confusing. When we go short, we're going to sell short, take the price down on a break of support. And we're going to exit when the buyers come back in on a break of resistance. All right. When we go long, when we go long up, we're gonna buy on a break of resistance, sell at a break of support. Okay, so here was the short trade. And now, RK, what you're asking is, did we get a buy signal on the break of the green candle on the break of resistance, right?
Yep, that's right.
Very good. Okay, so we did. So we got, I know this is hard to see, so let's open it up. All right, so here was our sell signal, is this dotted line right here. We closed the short trade on a break of resistance on this candle here. This white arrow here, this white arrow is our exit signal on this candle. But right here, this little triangle right here, can you guys see this little triangle, this white triangle right here?
Yep, we can see that.
Very good. So when this candle hit this resistance right here, I mean, it's pretty cool stuff, guys. When it hit that resistance line right here, it gave us a sell signal to close the short trade, okay? To close the short trade, which is this trade right here. All right, which is this trade right here. All right, and then it turned around on the next candle, right? Remember I said, right? This is why we want to, every candle here is 60 minutes, so we have to be quick. If we trade in a small time frame, we've got to be quick. On the 4-hour time frame, we got 4 hours to make a decision. 60 minutes, guess what? If things turn, we got an hour. So here was the exit on the short trade here, and then the price broke and closed this resistance right here. Buyers are in. We've got a green candle. We got a buy signal right here. So we went short, and now we've got a buy signal on the following candle here to go long on a break of this resistance right here. This blue arrow here is our buy signal to get in, and it's right here. This triangle that's right here is our price, which is right at 24.95, right? Buy signal, Ethereum, 60 minutes to get in. All right, now follow me, it's not over yet. We're not done. We're not done. All right, so price went up, retraced, held support. This is support here. Price held support, came all the way down to support, held support, and is now moving higher, right? It's now moving higher. Can anyone tell me, right, why we did not get a sell signal at support? Why we did not get a sell signal to close the long trade at support?
Because it rejected that level.
Because it did what?
It rejected.
Okay.
It rejects from the support, and now it's going up.
Okay, so it did not, anyone else? Anyone else? Anyone else? Do you guys know why it did not give a sell signal to close the trade? Because it retraced, right? It retraced. Why it did not give a sell signal to close the long trade?
I guess because the candle did not close below that.
Very good, because the price never closed below support. All right. So remember, if the price gets below support, that's our trigger to get out. Here, it never closed. See here, it never closed below support. So we always want to buy at resistance, sell at support. So we never got a chance to close the trade at support because guess what? It never broke support. This is where most traders lose a lot of money. All right. And I'm sure as new traders, you guys have done this, where you got in a trade, you timed it perfectly, right? You put a stop loss right below it, right? right below, right, your resistance line. Price comes down, right, comes back down near support, kicks you out, takes out your stop loss, and then guess what? The price now keeps going up higher. And it's like, wow, I was right on the trade, but guess what? It kicked me out. That happens a lot, especially with new traders. Okay, that's why we don't put in stop losses in this area here.
So are we supposed to be, are we supposed to watch that happen, but hold the entire time?
Yes, yes, you hold, you hold, you hold. Understand that we only close the trades when we break support, when the price breaks support. And the reason is because the buyers are no longer in control. The sellers are in control now. All right. So when the sellers are in control, that's when we get out of trades. Okay. So remember, we want to buy at resistance, sell at support, sell at support. Here's an example here. This is a good example here. And it is critical. It is critical. All right. So here's another example here. And I'll draw it out. If you're going to put a stop loss, if you guys are going to put a stop loss, you have to put it underneath your support. You can't put it anywhere within your support and resistance box. You've got to put it underneath if you're going to put a stop loss. So here's an example here. So here, follow me. Price here, price broke resistance. Here is our resistance here. Price broke resistance. We got a buy signal, this blue arrow, right? The buyers are in control. We cannot guarantee, let me repeat, we cannot guarantee price. The only thing we can do is react. All right, Peter, I'll get you in a minute. We cannot guarantee that the price is going to go higher, that it's going to continue into a trend. We can't guarantee that. All we can do, our job as traders is when the price breaks resistance, it gets into the markup phase, our job is to get in. That's it. That's our job. That's our first job. Our second job is this, right? If the sellers come back in, right? And we'll know if they come back in because price broke support. We have to get out. That's our job. All right. So follow me. So price broke resistance, our buy signal here. Price went up, came back down. The sellers are now back in control. Price broke support. Guess what? We got a sell signal to get out. Here was our buy signal. Here is our sell signal. We took a small loss. Our goal is to take small losses, big wins. Okay. So I'm going to turn off the automation, the short automation here so that you guys can see this. Okay. So follow me. Buy, there was our buy signal to get in, price broke support, right? If you're going to put a stop loss, put it underneath here. Don't put it anywhere in here. You're going to get stopped out. Okay, we want to get stopped out when the sellers are in control. So here we closed the trade, we bought here, sold here. Guess what? The price came all the way down. We did not sustain this loss. When the selling comes in and the price breaks support, you always have to assume that the price will do this. Too many new traders hold on to price, assuming that the price will go back up, right? assuming that it will go back up. All right, so guess what? We don't want to do that, right? We want to take small losses. We make money when we take small losses, big wins. Guess what? All right, guess what? This trade right here, right? This trade right here is a beautiful trade. Okay, let me show you guys this. Let me show you guys this. Look at this. Bought here, got out here. We could have turned the trade around. That's a losing trade, right? We can't get caught up with losing trades. Our job is to minimize the losses, take small losses. So look at this. All right, so here, bought here, sold here, got out here, then went short and captured this trade here. Did this trade here, is this trade here more than this loss here? Is this profitable trade here more than this loss here?
Say that question again.
Is this losing trade here, right? This loss here where we bought here on a break of resistance, sold here on a break of support, all right? Is this trade here more than this trade here, this short trade here? No, right? Right, so we look.
You cut your losses short.
We cut our loss short, but guess what? We turned the trade. Okay, so RK, you wanted to find out about reversals, right?
Yep.
This is a reversal. This is a perfect reversal, right? So we got in long because the buys are in control. Guess what? Right? Price reversed, right? Broke support, we got out, and then we went short. Okay, you could have gone short here. So you bought here, shorted here, and now we're looking to go long here again. All right, Peter, you had a question?
Yeah, can we, the next chart, can we take a look at Tesla?
Okay, Tesla. Okay, RK, does this make sense? I want to make sure.
Yep, all good. Thanks.
You're good? Okay, perfect. Okay, Tesla. Okay, let's take a look at that in Stock Boss. Okay, Peter, see, XLE. You were right, Peter.
Right? Today you would have made some good profit. I mean, you can look at the 4-hour chart and then also the 1-hour chart. It's still on the markup phase. I think it's going to break resistance right now. It's testing resistance right now. If it breaks out, still, it's the low man standing. Anyways, if we look at Tesla,
what's the symbol?
TSLA.
Okay.
You just told me to trade what's in front of us. Trade what's in front of us.
You're right.
I'm just putting your words back to you.
You're right. You're right. You're right. Oh my God.
No matter what the news says, no matter what the market, if the chart is telling you to go long, go long.
Yeah.
You're right. Out.
You're right.
Anyways,
Okay.
Tomorrow, earnings, Tesla. I know a lot of people are waiting on this trade. So question is on the 240. I'm not trading this. I just have a very small insurance option position on this one. But I'm thinking usually a huge stock like this after earnings, since we're in the markdown phase of technology, my intuition tells me it's going to break down huge. It's just like Netflix. So just kind of see, where we are in the on the 240. Do we break any support?
Let's see here. Let's see.
The chart is not very clear because it makes a 4-hour chart just very choppy.
Yeah, let's see. Let's bring in more data here.
Because people who pay attention to Netflix, just like Netflix, not too bad of a report, but after the closing, it broke down 80 points after market. So just thinking, man, this stock could break down hard.
So you're looking for,
Yeah, support and resistance,
but you're looking to do what with it? You're looking to
I was thinking, my intuition says it's gonna break down just like Netflix after earnings, because the earnings is after market closes.
Okay. All right. Okay, so let's do this. So this is the 240.
I don't have any money left because I'm committed to my bearish IWM.
Yeah.
I don't have any money to go short on this one.
I have a
So,
question.
but I just want to watch.
Yeah, the earnings for Netflix was horrible though, but I think Tesla's earnings is going to be positive. So wouldn't you think it's going to go up or no?
See, that's the question for David. David says, the markdown, the phase is more important than the news and the earnings report.
Yeah.
So we'll see tomorrow.
When I
Okay.
look at the chart, Tesla chart, what I'm getting is that for maybe next 1 or 2 days, it will again be at the same level, and probably it will come down to 887. And from there, maybe it will go up. That's the feeling what I'm getting.
All
I'm
right.
looking at 4-hour
See what
chart.
the chart tells us. What do you think, David?
Well, the thing is, we've got some. Oh boy, let's see here. I hate these because there really isn't
either way.
there's no direction. Okay, so if you guys take a look at this, right? Let's see here. I mean, the good thing is that we're bearish. The market is bearish, right? So we'll put a low here, and we'll do this here. Okay, so if we look here, okay, there's no real trend. Okay, right? It looks a lot like Bitcoin here. All right. So if you guys look at Bitcoin, all right. So when things sets up like this, right? Anything could happen. All right. So look here for a second. Look here. This is almost identical to Bitcoin. All right. But the bias is definitely to the downside. Okay. You see here, look at this. Look at this. You see here? Support, resistance, support, resistance, support. All right. So there's a good chance that support could hold here, right? Support, the lows could hold here and then get a bounce back. Okay, or price could just break this support area in here. So if we take a look at Peter's situation here, where is it? Right here. Look, same thing is happening. All right, support, resistance, support, resistance, support. So it's really hard to tell. Okay, it's really hard to tell because guess what? Right, if good news comes in, guess what? They could pull it back up. All right, but it's still in the markdown phase. It is in the markdown phase, but there is no real trend. It's stuck between support and resistance. This is tradable. This is traders love this. All right, because what they can do is they'll see where price is holding like this here, and they will just trade the box. So they will trade support all the way back to resistance. All right, because that's the easy money. All right, That's the easy money. The easy money is to trade it all the way back to resistance, from support to resistance, from
So
support
what would
to
give us the
resistance.
buy signal for this if it's doing a range bound? It's just if it breaks the red candle, the high,
It's
right?
tough, right? I mean, it's tough.
Breaks the 240 high.
Yeah, I mean, if we look
You
at
go
it
bullish.
if you're trading it on the 240,
You have to trade on the smaller time frame to look for a bullish signal.
yeah, I mean, it's really hard. I would say the buy, and I'm just guessing with this. Let's see.
You know, we just
It's tough. I would say it would have to get probably up in this area here. It's got to get above the buyers. The buyers would have to come in. You see the last when this candle right here, when the buying came in, right? The buying, this is very tough. Okay, you see where the buying came here on this break. See that on the moving average, price got above this moving average. So the moving average is right up here. So it would have to get in this area to get even close. See the previous buy signal? We didn't get a previous buy signal until the break of this resistance here, and it failed. All right, and it failed. I would leave this alone. I wouldn't. There are better trades out there, right? You have no direction, absolutely no direction. You could trade this for a quick trade, all right, for a quick trade to possibly get back up to this area, but you will not get confirmation. If you get in here, that's risky. If you get in anywhere in this area here, that's risky. Because guess what? You're still in the markdown phase. You've got to get above this area here to get close to even buying, to get out of the markdown phase. And the way Tesla trades, and I don't trade Tesla, all right? Just from looking at the candles here, the chart, there's a lot of volatility, a lot of big movement. Look at these candles here, right? So it might get all the way up in this area before you have to buy. But guess what? You've got resistance right here, and these are all-time highs. So you might get knocked back down. You guys see that? Here is resistance here, right? So you don't have a lot to go here. There isn't, you're talking all-time highs at 12, what is that? 1200. The market is very bearish. So to go long, boy, and I don't even see where you could go short. There is not a clear path to go short. I would leave it. Guys, some stocks, they're not tradable. They're not tradable. Can you scalp it? You could probably scalp it on a smaller time frame, right? But is it worth it? Is it worth it? I mean, this is your trade right here. This is your trade right here. Right here. But we're talking in and out, day trading it. There's no trend right there. Even your downside, even getting puts and taking it to the downside, we always have to look at risk reward, right? So even taking it to the downside, you don't have a lot of downside. I mean, from here to here, that's your downside. Here is your support right here, right? Your support is at 750. Right now it's trading at 918. It's not good. I don't like it. I might be wrong. I might be wrong. You might find some opportunities, but it just looks tough. Now, if it will come in, let's say the price, forget this price right here, forget this price action. Let's say it will come in from a high up in this area here, right? Broke support right here. This didn't happen, and now you've got a clear path. that's a better, but it's all the way down here and it's very choppy.
Show everybody the QQQ. Yeah.
QQQ, all right.
Yeah.
What time frame?
Normal 240.
240, okay.
It was a really crazy day for QQQ. You know, it didn't do nothing during the day and then went up like towards the end and then crashed right back down. It was yeah, a lot of people got tricked.
But understand, when the markets get like this, you're gonna have a lot of crazy volatility. All right. And that's not good for longs, right? And that's usually very
This was my basis of thinking Tesla maybe get pulled down because the overall technology market.
yeah, I mean, I see it, but it's just tough. You can do it, you just have to be quick. You just have to be quick. All right. I don't know why I'm not that is.
Yeah, I'm still in Adobe going short. So just nothing to do, just hold it.
Let me see if I can pull up another chart here. Oh. Okay, let's see, QQQ. What are you looking to do?
Like, you know, just you were just commenting on the QQQ affects all technology stock. You know, in the past, it's like I was asking you, oh, does Netflix, you know, I had a reverse. I was thinking Netflix or not Netflix, but NVIDIA pushes the QQQ up, you know, if in the big majority stocks, you know, or is it the QQQ pushes NVIDIA down? So that was in the beginning, I was a little confused.
Okay, well, clearly a markdown phase, right? So clearly a markdown phase, all right?
You say we're officially in the bear market for QQQ?
Yeah, I mean, I wouldn't say, I mean, you know, I mean, I know, you know, normally it's like you what the 10% correct, you know, but what I look for is this, right? And this is what you guys should be looking for, okay? And it's really, really easy, all right? The Dow is in the markdown phase right here. It's in the markdown phase. That's why I always like to go back, because we can do a lot of analysis and we can talk about all of this other stuff that really doesn't matter, right? So here, really easy. The Dow is in the markdown phase. Red candles, sellers are definitely in, right? The S&P markdown phase, right? Guess what? We no longer have a buy signal. We have a sell signal, all right? No green candles, right? Red candles, so the sellers are definitely in. Red candles, red candles. On the NASDAQ, same thing. Markdown phase, we're breaking, look, we break it. We just broke redistribution. We just got into the redistribution phase on the NASDAQ, right? So we know NASDAQ, Qs, they'll do the same thing here, all right? So let me open this up, okay? When all else fails, guys, you have to follow the 4 market phases. It's not me that's saying this, it's what price is telling us, right? Price is telling us that, guess what? You know, the buyers are no longer buying and the sellers are in, okay? All right, my charts are just messing up here. All right, so if you look here, this is clearly the markdown phase. We just broke support. So that's the redistribution phase on the Qs, on the NASDAQ. All right, same on the Qs. So it's down, it's going down. When the buyers come in, when the longs come in, we'll know, right? We'll start breaking new resistance levels, and then we'll think otherwise. Otherwise, puts. You can wait for a reversal. You can wait for a pullback, and then go short again. All right. Here on your trade here, the IWM. Guess what? It's still in the markdown phase. Right? It's still in the markdown phase. Right? So it is what it is. Could it change? Yes, it can absolutely change. But right now, sellers are in control. Sellers are in control. Right? All right. Any other questions? Any other questions? Peter, any questions?
I'm good. Like I said, nothing to do. I'm already in the trade, so
Just hold. I mean,
hold on to dear life.
yeah, I mean, just hold on, sit back, sit back and take a vacation, and I mean, you've got a beautiful trade. Hold on 1 second here. Let's see here. You've got a.
For the new traders, it's like listening to the news, because in the beginning I was watching CNBC, but they really like to gaslight you. They don't really want to tell you it's a bear market. They'll tell you, they'll make every excuses, like, nobody likes to cause a panic, but it is. It's breaking down.
It's breaking.
Everybody says, "Oh, it's this time for long-term investors to buy the dip." It's great for long-term investment. You can get things cheaper.
We just have to go. I mean, I know it's hard to do. It's really hard to do, but we've got to go with what the market is telling us. I mean, look at this. These are the sectors. They're all down. They're all down. Right? They're all down. They're down. All the sectors are down. Right? The VIX, look at the VIX. The VIX is at 31. Right? We haven't seen the VIX at 31 in a long time. All right. And guess what? All the sectors are down except for energy. So and look, the proof is right here. The proof is right here, clearly in the markdown phase. This is a reversal. Okay, this is a reversal. They're no longer buying, they're selling. So, if they're selling, we've got to be selling or going short. When they're buying, like here in the markup phase, right here, we should be buying.
Can you look at the weekly on that IWM?
Okay.
Yeah.
I'll put it here.
The IWM.
Look at that.
I was drawing what is the bottom of this,
Well, your target is what, 130?
My target is not a very aggressive target. It was just like a very conservative target. So 163 is my first target. So, but it could go really down to 100. It's like the base of the mountains at 100, but I'm getting out at my first target, 163.
Yeah, 100 is really aggressive.
Yeah, so I'm just kind of being a little conservative.
Yeah,
on the target.
Yeah, 160, and I think we talked about this before. 163. Here is your support. Here is your major support right here. So right at 160, You've got some support right here. I mean, Peter, you know, this is a beautiful trade, okay?
And then I'm gonna keep some shares. I'm just gonna let it run to see how far it could go. I'm just gonna, majority of my profit will be taken at 163, but there's some shares I'm gonna keep on holding until I get that signal that's in accumulation.
Keep an eye on 170, 171. All right, this was the previous resistance. So look here, this was the previous resistance, which we broke right here, which we broke, and we got a buy signal. That buy signal came in right on that break of resistance right here at 170. All right, just keep an eye on that, because that was the previous, you know, you've got stronger support right here, right? So this, it really might get you right here at 160, right? But just keep an eye on 170. If you get anywhere past this area, I mean, this is your big trade. This is your trade. I wouldn't spend a lot of time looking for, you know, a lot of other trades, right? I mean,
Yeah, like I said, I'm really committed to this trade. I don't
yeah.
have any capital left for anything else.
Yeah.
Just hold on to dear life.
Yeah, if you are lucky, I mean, this could be a big trade for you, Peter. And you put in a lot of capital to work. If you really watch this, I mean, don't watch it where it's driving you nuts, all right? But I mean, look at the price action on the weekly. It's nothing but selling here on the weekly. You broke that big support on the weekly, right? I would watch this area likely 170, but 160, 163 right there, you've got more support. If for whatever reason, price really collapse, right? Price really collapse and breaks that 145, you could get something like this.
Yeah, I'm gonna keep some, maybe 15% of my shares, just let it run until it gives me an accumulation signal.
Yeah.
You know, because for the new traders, I use Fibonacci drawing tool. So Fibonacci at 100, measure all the way to 100 to all the way to 245-ish. You know, my target was only at, you know, 50%. You know, I'm only taking 50% of the move as a profit, but I'm gonna let some run.
Yeah, I mean, yeah, you should be, and you know, keep in mind the overall market too. So if I tell you, it's not looking good for the market. It's not looking good. And you know, whenever we're coming from all-time highs, right? So we coming from all-time highs on the NASDAQ, right? On the NASDAQ, coming from all-time highs from the Dow, the S&P. Whenever we get selling coming from the all-time highs, you've got to be careful, or you just got to be ready, like Peter's doing, to take the damn, you know, to take it down, because remember we at all-time highs, and what goes up must come down. I'm not saying this is the time, right? I'm not saying this is the time, but
For people who likes to sell, like to take bearish positions, like when it breaks down, there is no time to get into the trade. It's just you can't get the best price. You're overpaying.
yeah.
So the best time to prepare to stock up on that position is like right in the beginning. You could just add in a few shares right now. But like if you study that chart, the bearish, there's no time. Like when it moves down quick. It's just like, it's just like falling off of the building. There's no time to react.
Yeah, that's a good point. That's a good point. So this is these shorts. When we take these shorts, all right, we get put. You've got to be very good. You got to be very skilled, because yeah, what took several months from here to get all the way up here. What took several months to do that, the price action came down here in what, a week. So they fall. When they fall, and they fall quick. So you've got to be right on it. but boy, you can do really well. All right, when they fall pretty quick. Yeah, so you don't have a lot of time to get in, and we want to be out. So you don't have a lot of time to get out, right? You don't have a lot of time to get out. So, all right. Anything else, guys?
Exciting times.
Peter, Peter, when I tell you, you nailed this trade. I mean, you nailed it. So your job is to just hold on. It's going to be tough. I mean, it's going to be tough, right? Because we just don't know.
It's those what do you call it? Those once in a blue moon, these short opportunities, these huge short opportunities. It doesn't come along often.
Yeah, and remember, January is usually it's I like September, right? August, September are usually very, very bearish, right? And usually this time of the year we can get bearish too, right? Before we get into the spring and price might start moving up again. That's just historically what price does. But guess what? Anything can happen because we are coming from all-time highs. And if there is any real selling that comes into this market, and the market was down, I think 800 points today. Was it 800 points? Was the down? I think it was down pretty big. I know it was down big yesterday, and they pulled it back up. When you see that happening, that's a lot of they're trying to prop it up. But at some point, if the selling continues, it'll have to give way. Okay, so just hold on to your trade here, Peter. Watch the markets. Be careful of longs. Be careful of longs. Watch the VIX. Watch the VIX. The VIX is important. Okay, the VIX is important, right? Understand, anytime the VIX gets above 20, all right? So 20 is right here. And anytime the VIX gets above 20, all right, that's very, very bearish. All right, so here is 20. This line right here is 20. And we are way above that, right? This is the crash of when COVID hit, right? You see that here. You see all that green, that spike up. Guess what? Guess what? We are testing these highs here in the VIX. All right. So that's the kind of stuff we want to be looking at. Forget CNBC. All right. This is the kind of stuff we want to be watching. Right. So we want to watch. VIX is at 34. If it keeps getting higher, moving higher, guess what? Right? Remember, when the VIX Volatility Index, when the VIX goes up, the markets go down. When the VIX goes down, good for stocks, right? This is not good for stocks. This is not good for stocks. So if it holds, if the VIX holds and calm down, then we might see a reversal in price. But keep an eye on the VIX. And you guys can pull it up too. Just go on Google VIX and you can see in real time what the VIX is doing. So keep an eye on that. All right, guys. I wasn't planning. This is a beginner's class we do on Tuesdays. But guess what? You got to get into this stuff, right? You got to get into this stuff pretty quick. And I might start doing more of this for new traders. Just getting right into it. Just getting right into it. All right. So that you guys get that information. All right. So any questions for me? Any more questions?
No, I'm good. Thanks.
All right. Perfect. Okay. Peter, hold on, buddy. Hold tight.
Thank you. Yep.
All right, hold on, hold tight. You've got everything working in your favor. All right, everything is working in your favor here. All right, so, all right, guys, you guys take care, and I will see you guys tomorrow for trading in the zone. All right, take care. Have a good evening. Bye-bye.
Thanks, bye.